I'm Eric Marks, one of the club co-presidents and a graduate engineering student here at Penn. I'm pleased to welcome you to the Digital Securities panel. And please allow me to introduce our panelists today. Immediately to my right, we have Jor Law, who is an advisor to T0 and currently acting as its interim co-head of issuance, where he manages product, operations, and sales for T0's business unit and servicing primary issuance. Jor is also a finance and securities attorney who is most well known for his expertise in secured lending and alternative finance. He is also a co-founder of Verify Investor, which was the dominant accredited investor verification service in the world at the time it was acquired. And then to Jor's right, we have Jamie Finn, who has been an early investor and builder in the next big trends to modernizing financial systems. The work he has done at Securitize has trailblazed a whole new way of managing, trading, and issuing securities. Previously, Jamie worked at large companies like AT&T, Telefonica, O2, and Ericsson, as well as startups such as Contera, Thumbplay, Zingy, and others. Then to Jamie's right, we have Leeor Shimron, who's the CEO of NovaBlock Capital, a leading blockchain investment firm building the next generation of efficient capital markets. Prior to co-founding NovaBlock, Leeor served as the head of business development and corporate partnership at ZL Technologies, a data-driven tech company. And after his tenure in Silicon Valley, Leeor launched the Shimron Investment Group. And there he managed the development and sales of luxury residential properties. Leeor is also a Penn alum and has a degree in economics. Last but not least, it is my special pleasure to introduce Jitin Jain, one of the founders of the Penn Blockchain Club. He's co-founder and CTO of Liquidity Digital, a company building a platform for regularly compliant digital securities. He's always been passionate about emerging technologies, and prior to joining Wharton for MBA in 2016, he led teams which created products in cloud and artificial intelligence. So with that, I'll hand it off to Jitin, and thank you all for coming.
Thank you, everyone. Deja vu. Last year, we started this conference, and it's good to see all of you coming back and a lot of speakers coming back. Last year, I was moderating the panel Disrupting Finance, and now we have grown more niche into digital securities. That's great. So let's start directly with Leeor. Given the crazy upward trajectory of the market in 2017 and the downward spiral in 2018, what are your thoughts on 2019?
Sure. Is this working? Can you guys hear me all right? Yeah?
I can hear.
All right. Okay. First of all, I want to say it's great to be back on Penn's campus. And it's been a few years. Everything looks brand spanking new, so well on it. I think we're at a very exciting time. Obviously, the mania of 2017 was crazy, and I think it was both a blessing and a curse. A lot of investors were burned, but also a lot of talent poured into the space. So it's exciting to see the builders at play. It's great to be sitting with a couple of them right here. As an investor in the space, we're always analyzing and looking at macro trends. And it's apparent that we're at the convergence of several different trends. We're seeing private companies stay private longer. That's because of the increased regulatory burden of going public, as well as the declining cost of capital in the private markets. If you look at the private markets, you have 50% less IPOs than in 1996, and the number of new IPOs every year on average has also decreased by 2/3 since 1996. I think moving forward, that's obviously one trend, but on the other hand, we're seeing this explosion of tokenization of traditional assets and securities, and that's really proving to be an alternative fundraising mechanism and capital formation mechanism, as well as exchange mechanism for early stage companies that want to access liquidity. So I think that's really the crux of the digital security landscape and where things are going. Also, I think for 2019, we're going to see a lot more institutional investment and adoption. we're seeing a lot of the institutional grade platforms and exchanges like Bakkt and Fidelity going live. That really is a prerequisite for institutions to become more involved in this space, so that can't be overscored. So I think it'll be interesting to see what the next 12 months hold.
That's great. So going back to Jor, so you've been in securities space for last more than 2 decades, around 2 decades, and aren't securities already in digital format? So what are we talking about these new so-called digital securities? What is so digital about them?
Yeah, I mean, to some extent, yes. For most of us that have kind of interacted with securities, we've interacted with them in digital format already. Even if they're backed by paper, when you log onto your E-Trade or TD Ameritrade account or something like that, they're effectively digital as far as you're concerned, right? More recently, private companies, which kind of relied on paper, have already been going digital by using, tools like Capture or Carta, where they effectively have digital securities, managed, online. I think tokenization just takes it one step further. It introduces a different type of technology, and we're kind of at crossroads now where a lot of people are still based on paper and then linking to a tokenized token. But one day, and I think the hope is that the second you create it, it will be digital, it will be tokenized. So yeah, to answer your question, effectively, I think a lot of companies already are with digital security. Many more can be, but tokenization is just a further evolution in it.
Great. And so just for some basic thoughts, so when we're talking about digital securities, these are the same things as security tokens. So just for that.
Yeah, unfortunately, our industry gets really caught up in the nomenclature, whether it's digital security, security tokens, smart security, all really means the same thing.
Programmable securities.
Yeah.
Okay. So Jamie, with those tokens, what do you think about the difference between utility tokens and cryptos and digital securities?
Yeah, I think that's one of the interesting spaces, and I'll refer back to something that Carlos, my co-founder, the way he kind of explained it, right? So you start with a type of product that is a kind of a private security, which is much more like the digital security you're referencing, which is on a card or something like that, where it's only visible really to the company. And you can get all the way over to utility tokens, which are essentially normally kind of pre-buying a service, which as an investor never made any sense to me. Why am I going to go and buy something in advance? It's just a bad use of capital. And then what's happened now is we have these new products, which are these digital securities, and they're on public blockchains. And we're big believers in public blockchains, whilst we understand that most of the major kind of projects, and we're working with IBM on one in particular, will happen on permissioned blockchains. We feel that over time, everything, just like everything's moved to the cloud, everything will end up on a public blockchain. So you have to kind of start with the market where it is and where people are comfortable, and then move into the new space, which we believe is public blockchains. I have no idea which one is going to be the one, but I will say this much: it's clear to me that when we went from single entry accounting to double entry accounting, that was a big upgrade. Now we're in triple entry accounting, and this is a big upgrade again. And that's really what we're talking about here, is that transparency and the ability to drive in global capital.
Yeah, it's funny you mentioned triple entry accounting system. In fact, one of my panelists who were there last year, that guy, he was creating an accounting platform on blockchain, triple entry accounting system. So
that is what it is.
okay. So, Jor, T0 was a trading platform for private securities, and in addition to that, you guys entered the issuance space as well.
Well, hold on, it is a trading platform. It's not a historical thing yet,
in addition to that, they have entered issuance space as well.
Yep.
So how would you differentiate your issuance platform from others?
So T0 is a technology company, and it creates essentially software. And through its subsidiaries and through joint ventures, it operates ATS and then soon hopefully a national exchange. So you can't really have a secondary market without a primary market. And T0 decided that in addition to partnering with folks like Securitize, there were a number of folks that just came to T0 and said, look, can we just work with you? Can you just take us through the process? We don't really want to talk to anybody else. And the decision was made before I got there to launch a issuance platform. The benefit, I think, for T0 effectively is that, if they can kind of have a pipeline of issuances that kind of go through their own pipeline, it gives them a little bit more visibility into kind of what will go into their platform instead of just wondering what the industry is going to do. Some relying on some partners is great, but having the ability to know your own pipeline is nice as well. As for kind of how I think T0's issuance platform kind of differs from other issuance platforms, I think is basically tied to T0's network. If you kind of look across it, you will get people that, if you think of what an issuance platform or service is, it's technology, it's know-how, it's relationships to be able to refer for people to help place deals. And T0 has certain advantages in those areas where historically, they're backed by like Overstock. It's known to have a good tech team. How much of that translates over to the blockchain team, who the heck knows? But T0's is a tech powerhouse. It raised more money than anybody else did in the issuance platform, so it's well funded. It's got a big team, possibly the biggest team in the space at the moment. It's got a big brand. It's probably got the biggest brand in the space, and that brings eyeballs to anything they do, right? They do an issuance and they happen to be able to help market it or something, that brand will help. They've got existing network with existing broker-dealers in the market. Instead of just being a startup, T0's technology and they're kind of in their network, they're already powering trades into the equity market, right? And they already have a network of 150 or so broker-dealers. Some of which have already said, like, hey, we really like what you're doing in blockchain, we want to get onboarded. So a lot of the things that people are trying to build out, which are like scale, brand, broker-dealer networks and things like that, they have those already. So it's just a matter of like packaging things together and offering a good service.
That's great. So Jamie, Securitize has a very interesting story to start with. So you guys start with Spice VC and then they tokenize that fund. You want to share that story and what are the benefits Spice VC has seen?
Yeah, sure.
Tokenizing the fund?
You got to go back basically to early kind of summer 2017, and Spice wanted to do a tokenized venture capital fund. And the neat thing about a tokenized venture capital fund is really two to three things. One of them is that it's a new asset class that is really hard to purchase normally. The second one is that it is potentially liquid. So you have the benefits of liquidity. And the third one is really global capital formation. And so you look at those three benefits. And so doing a tokenized venture capital fund makes a ton of sense, right? People understand it. And I think the best products in the space right now are all tokenized funds. But what happened was Carlos was looking for a platform to kind of run his offering. And he couldn't find one. And so he opted, because of his background in product development, he was like, we're going to build this. So he came to me. I actually was the seed investor personally in Spice VC, and then got really involved. And I actually thought, to be fair, I thought this was going to be like a side gig. I had no intent for this to be a thing. It was kind of by accident. But there was so much demand for people to issue digital securities that we essentially created the platform, and then from there have been very customer centric in our product development. So we're not talking theoretical stuff. Everything we do is real. It's on chain. You can view the contracts. Trading is happening. All the marketplaces and exchanges that we have live are operational. There's most of the funds that are trading at 20 to 30% premium to NAV, which is the opposite of what people thought. Everybody thought if you tokenize a venture fund, it's going to be trading below NAV, which is not the case. And so, I think when we created this business, it was, well, maybe there'll be liquidity one day. Now there are actual marketplaces and exchanges where you can list and trade, and people like T0 that are coming to market at scale. And I think this is where we're starting. People ask, oh, is this the year of security token? No, this is the year that digital securities get tokenized. Like, that's what's happening. But it's very early, and it's ridiculous. We're the world leading platform in terms of issuances, and we have issued 7 tokens. It's like nothing. I mean, come on. So it's very early in the market. We need more tokens to be issued. We need more people to get involved in trading. And that's really where everybody needs to be focusing their energy. That's why T0 is doing it. That's why other marketplaces will do it. People need stuff to trade. That's really the fundamental truth. You can't trade like 7 things. It's not worth it.
Yeah, to piggyback off of what Jamie was just saying, it's important to note that digital securities are essentially completely different asset class from crypto assets, from Bitcoin, from Ether. They have a completely different risk profile. I think there's this huge education gap where institutional investors, they were kind of scared off by the mania of 2017, and they don't understand that these are essentially just extensions of normal private placements. You're just taking a private placement, adding a digital wrapper, automating a lot of the back-end processes, allowing them to more freely trade. But at the end of the day, what's going to propel this industry forward is when we have high-yielding, high-returning assets that investors want to take on. Tokenization is an awesome tool, but it should be ancillary to the actual merits of the deal itself.
Yeah, that reminds me of some of the things we learn at data analytics courses, garbage in, garbage out. So digital securities are not going to make anything look very good. It's just a wrapper which makes everything very efficient. So yeah, with that, so you invested in many DSO companies such as Securitize and Prime Trust, and you also co-founded real estate investment management firm. So let's get into specifics. What benefits digital securities can actually bring to a relatively more illiquid asset class such as real estate?
Sure. So in the long run, I'm a firm believer that basically every asset class is going to be digitized and tokenized. I think what we're seeing right now as the two emerging use cases are tokenized funds, which Jamie touched on, and real estate. Through my real estate background, I've really firsthand seen how cumbersome the transaction settlement process is. I'm very optimistic and very excited about the prospect of tokenizing global real estate, which equals over $250 trillion. To be frank, these aren't markets that are going to be liquidly tradable overnight. It's going to take time to get there. But it's almost just an option for liquidity. Once these markets prove out to be more robust, and we have more participants actively trading, it's going to take time to build those markets and build the liquidity, but a lot of that automation on the back end really assists with that. We were just talking to a company the other week that essentially is tokenizing the non-traded REIT market. That's a market that has $5 billion in new issuances every year and has an inventory of over $100 billion. And essentially, that market in particular is ripe for disruption because you have maybe a dozen or so large private equity funds that are trading these assets amongst themselves. And so as a result, there are very high barriers to entry. So I think the two main benefits for tokenization, particularly to real estate, is global investor participation and just automating all the back-end processes. And once we're able to do that, we're going to see a lot more investor participation.
Yeah, I'm not sure how many people have actually tried to buy or sell a private security in the room, but it's a pretty cumbersome process you have to go through. It's upwards of 12 steps, usually involves multiple law firms that get involved and tens of thousands of dollars. So when you take a process that's that complicated and you simplify it into code that can validate and complete a transaction in pretty much minutes, not seconds, but definitely minutes, then you're simplifying a lot of people's lives and taking a lot of friction out of the market. And that's something that it's really worth understanding is the drama of buying a private security today, which is so complex and cumbersome, disappears in this new market. And that's super powerful.
Yeah, that's a good point you mentioned. In fact, we were talking to John Wu as well. So he's the CEO of Digital Asset Group in Sharespost. So for people who are not aware of, Sharespost has been in private placement securities even without blockchain for the last decade.
It's true.
So when they got into this space, then that means they have seen all the inefficiencies of trading private placement securities, and now they see the efficiency of blockchain-based securities. Now they are getting into this space. And I was listening to his podcast, and he said that one of the predictions which I have is next Uber or next other companies, they might directly issue securities on blockchain because of the efficiencies they may bring in. And one other example which we can take is Airbnb or Uber. They reached out to SEC for an update on Rule 701. And correct me, Jor, if I'm wrong in this legal. I don't claim to be any.
I thought we weren't doing an acronym. I was going to go Reg D, Reg S.
Yeah. So basically, they wanted. We all heard that Airbnb and Uber, they wanted to give some security, shares out to their ecosystem partners. So right now, in traditional infrastructure, it's very inefficient to do it. Maybe digital securities could be the answer to that.
It's a big piece of work though, because you have to think about, like as you go and you tokenize a business, you have to think about employees. So employee stock option plans are not designed for digital securities. They don't work that way. It's based on like historical paper shares. And that's how everything is designed. So as you tokenize a firm, you have to think about all the different pieces, starting from your employees all the way through to your investors, and then back out to public market. And the scary bit about doing this as a startup in particular is that you are now letting the market decide what you're actually worth, as opposed to what you could sell to a few investors. So that's a really dangerous place. That's why I feel like we've seen a lot of tokenized funds, we've seen a lot of real estate, because the net asset value on those things is relatively clear. When it comes to a startup, is Lyft really worth X billion? The market kind of said yes, it kind of said no, it's kind of come back. But like, what happens if, as Lyft grows, is the market going to follow it? And I, right now, I think it's a bit early, even for folks who we don't recommend that pure startups go and tokenize. We think Series B on is a reality. That's a market. You've got some scale. It kind of works. But before that, really don't bother with this space.
I mean, what the interesting thing about tokenization is it's just technology, really, right? It doesn't change the rules. It doesn't change everything. So right now we're kind of at a point in time where you can tokenize something, but you've got to make sure it works with the securities laws. You got to make sure it works with the corporate laws. A lot of people these days, think about, okay, I'll make sure that this works for securities laws, but they're ignoring the entire corporate layer. What could you do with your corporate shares under Delaware or whatever law you're under? That if you were going to tokenize it, does that token support all the functions that you would want to take from a corporate perspective? So there's things like that have to work out a little bit. If you're going to issue out, kind of like he said, employee stock option plans, the paperwork that you create to issue those have to contemplate tokenization. The tokens have to kind of have the mechanisms to support vesting and other things. So there's, some people have kind of gotten further in solving those problems. Some people haven't looked at those problems, but there are definitely things that I think in a few years later, everyone will be like, oh, of course, this is what we have to do. But we're a little bit early for the startup scene.
Great. So Jain, let's go through the life cycle of issuance. So you guys have been doing this. You have done this for a couple of assets. So let's start from you. How does it start?
Yeah.
And then how does it go to
Zero
or other?
I mean, from a procedural point of view, essentially customers will come to us and say, they want to issue create a digital security or issue a digital security. And it can be, an existing asset class that they already have. Maybe they just want to tokenize it part of their cap table, whatever it may be. Or it could be a new fundraise, right? And so functionally what you do is you set up an investor portal. You solve some of the basic problems right now. So online subscription kind of to the offering is fully managed through the platforms. You onboard, take people through the requisite checks that they have to go through. I'm trying to avoid words like KYC and AML. And then once you take them through that process, they're subscribed to the offering. You, as the issuer, are given keys that then you can send these digital securities to the investors that want them. And then once the investors have their digital securities, you as the issuer need to sign an agreement with a company like T0 or SharesPost or Open Finance and list your security with them. That's a really important thing. They can't just grab these things and put them on an exchange. You actually have to sign a deal with them. These are regulated entities. So you sign a deal with them, you'll get listed, and then once it's listed, you start trading. And trading is unbelievably complex, man. Every day we go through this, you have inquiries from the regulators, you have inquiries from investors. Folks don't understand the space. You have kind of US investors want to liquidate their whole position. You're like, no, it's only been 6 months, you can't sell anything. You have internal employees who want to sell shares, and you're like, no, you're an employee, you're under a different thing. You've got big investors that own more than 10% of the company, and you have to be like, no, that's different, you can't do that. So there's a lot of education that has to go on as these things trade. And all of that is, luckily it's codified into smart contracts that control it, but you still have the human element of explaining it to people. And so investor relations is a real thing. And as you go out, you tokenize an entity, you have to think about how you're going to interact with your investors. which most startups haven't really thought about. VC firms are pretty good at it. Real estate firms are somewhat okay at it, but it's like they're used to communicating, with 5 or 6 LPs they know pretty well. They kind of sit around the room, talk about it. It's scary when you have hundreds and potentially, a few thousand investors. So this space it forces you to think a little bit differently. And really engage with your investor in a much more active way, which I feel long term is going to be really, really positive for investors because it creates a new transparency, it creates new engagement, but it's a model that people have to figure out. And so we believe that there'll be a lot of services like voting. I mean, a lot of people here probably have public shares you probably ignore when you get the voting, right? Because it's like something in the mail, and you're like, what the hell is this? Ignore that. My vote doesn't count. But when it comes to this space, you'll be able to vote digitally through a web page in a couple of clicks. And then that's really interesting. And so once you get engaged in the process and you really care because your vote counts, then everything changes. And so, for me, I'm super excited about that as we kind of go down the path. But it's going to create a lot of new business opportunities for companies that need to provide the services around the issuances and the trading. These are initial functions. The future functions are going to be much bigger.
You want to add something on that?
Yeah, I think you don't have to necessarily, a lot of people come in and just think that it's a completely different process, it's completely new. And the reality is that you're following the same for the large part, you're following the same steps that you would follow if you were going to raise money anyway, right? You would still have to figure out what you want to raise. You'd have to go contact advisors, retain them, figure out, how to structure your raise. You'd have to think about the regulations, under what regulations you have to comply, what exemptions that you have. And then in this case, you have an additional tech layer where you might not have the expertise. You might have to hire some tech advisors or a firm like Securities that can kind of help you walk through the tech aspect of it. No different than if you were trying to do maybe like an oil and gas deal, and instead of just having a regular corporate securities attorney, you'd also have like an oil and gas specialist, right? Someone like that to help you. And then you pick your partners, right? Because it is technology, you're not going to do everything yourself. Much like in a private placement, or you might pick a partner that is a broker-dealer that can assist you with this. In this case, you might pick a partner like Securities to help you kind of with the issuance. You might pick a partner like T0 or Pro Securities or ATS to kind of be your trading partner. One of the things to understand, I think, is that the trading doesn't just happen by itself. Issuance doesn't just happen by itself, right? You still need a pretty good deal, and you need to be able to have an effective campaign to reach people, or someone that can kind of reach people on your behalf, right? Like a broker dealer. And once you're trading, if you don't communicate information about the company or whatever asset that's tied to that token, it's really hard for people to understand why they should buy it. Maybe someone will understand why they should sell it, but it's really difficult for a new person to come in and buy it. So you'd have to think about how people are going to discover the pricing for your tokens and things like that. So there's these types of things that you have to think through. And anyone that's kind of experienced in the space, a little bit more experienced than the next person, should be able to help you through this.
That's great, yeah. When it comes to programmable aspect of it, when we explain it to some of our potential clients, they're like, oh, can I do this? Is it even possible in this? Because of existing infrastructure, you cannot think of some of the things which you can do, like a dividend distribution. You have share buybacks. Now, using these programmable securities, you can do them in a very efficient way. Yeah, that's great.
Yeah, I did 100-to-1 reverse split per customer. It involved moving the decimal point 2 spaces, which in the traditional securities world would take a long time. In our world, it was the developers like, oh yeah, okay, we're done.
Yeah, that reminds me of Dole Foods case, where this owner wanted to take his company private, and when he called in all the shares, he got 20% more than he ever issued. Like, what? I issued only 100, I got 120. How do I pay for that?
Yeah, that's exactly the
frequent
problem that
occurrence.
blockchain tries to solve. It won't solve it. It won't solve it entirely if the industry insists on using kind of off blockchain kind of settlement, which some people will do for a while. But the technology exists so that you can prevent issues like that.
Great. So, Leeor, as an investor, where do you think this space needs more innovation? In other words, which kind of digital securities firm you would want to invest in?
Sure. So we're very much in the foundation building infrastructure phase, even more so than the crypto markets. Companies like Securitize, T0, Prime Trust are all doing really great things in terms of providing key core services that are needed to propel this industry forward. Look, to us, this isn't really anything that's that new or revolutionary. If you look at traditional capital markets, you have a whole bunch of service providers that are required to get securities off the ground. You need broker-dealers to actually build out the buy-side demand and market the securities and build a book of business of investors to sell the securities to. You need exchanges, which are regulated places for folks to trade these assets. You need custodians, which are qualified custodians that are regulated and actually hold the assets, especially for larger institutions that are mandated to use a third-party custodian and can't do custody in-house. And you need the issuance platforms, so the technology providers that are actually experimenting with new distribution mechanisms or capital formation mechanisms and are actually doing so. These are kind of the core pillars that as a firm we're looking at right now. And once the infrastructure is kind of more mature, then we're going to see kind of a rush for all these assets to be tokenized.
Yeah, and custody reminds me of a recent SEC post asking about the opinion of public about custody in digital asset space. I would highly recommend you to search for it. Then, Jamie, any predictions for this space? How will it evolve? Certainly not crypto price prediction.
Bitcoin 20,000. I think what we're seeing, and I mentioned it earlier, last year we did 28 deals. In the first month of this year, we did more than we did in the fourth quarter. In the first 15 days of this month, we've signed more deals than we did in the first quarter. So we see the market accelerating on the demand side. And I think one of the dangerous things in this space is to accept that all securities will end up being digital. Because it's a natural thing when you think about this, you're like, well, all my documents are digital, everything's digital. So you kind of naturally go to this place, which you mentioned, which of course everything's going to be digital, but maybe it won't be. And what if it isn't? And that's one of the fundamental shifts is most investors today look at a security token or a digital security as a worse asset class than a simple private placement memorandum, a simple PPM. They think the token makes it worse because they don't understand it. They think it's crypto. It's linked into that. And so what we're seeing now is we're going to see really high quality deals come to market, which will start to shift investor perspective. As soon as investor perspective shifts on this, then maybe you'll have the huge demand on the buy side. We're not there. People don't understand this product. It's mysterious. It's scary. It's new. But we are competing against a piece of paper. And so we should be able to make a better product than a piece of paper in the end.
So Jor, you are one of the early pioneers of crowdfunding. Should we be worried about DSOs becoming funding vehicle of last resort like crowdfunding? And how should industry handle this?
That's probably
Yeah, I mean, there are some similarities between where blockchain is headed and where crowdfunding was. I was early on in crowdfunding and, noticed that, there are successful deals being done in crowdfunding for sure. It is a growing market, but it certainly is a far cry from what, everyone hoped it would be.
In the US.
That's right. Internationally,
it's not as hamstrung as it is.
Yeah, internationally it's been a lot stronger. In the US, it's been tougher. The blockchain, I think, to the extent that financing, for digital securities mimics kind of crowdfunding, which is, I define that as funding from masses that you don't have a connection with, before, right? Then we risk kind of following in the same footsteps. I think it's different though this time for two reasons. One is I think tokenization, for better or worse, changed human behavior. It changed market psychology. it caused a lot of people to be interested in gambling or investing or doing whatever that they weren't necessarily interested in before. And that fundamentally shifted. It gave people this hope that, oh, anyone could maybe buy one of these things and trade it. And that was more of something that was not tied to digital securities. That was more kind of a utility token, ICO type of world. But that kind of mentality has carried over a little bit. Mm-hmm. The other thing is also crowdfunding never got investment and buy-in from major institutions in Wall Street and things like that. And when you compare that with tokenization of securities, you see a very different picture. At least over $500 million has been invested in the STO ecosystem infrastructure by large companies. And on top of that, almost every single major Wall Street participant is investing into blockchain or looking at it, even if they don't necessarily support it. I think when you get that sort of interest from the large institutions and they start bringing their deals in to increase the quality, you put tokenization on a totally different level than you do crowdfunding. There's a question there, Farm.
Yeah.
Thanks. This has been a great discussion, so I want to thank all the panelists. Picking up where you were just talking about institutional participation, driving mass participation. Do any of you have an opinion, one way or another, about the type of regulations that we should see in this space? Right now, there's a split between what the Uniform Law Commission is suggesting with regard to digital assets being governed by Article 8 in the current framework, or taking a novel approach that's been put forth by the state of Wyoming. And I wonder if the four of you have any thoughts on that.
Sure. Yeah, we need to expand accredited investor laws. Like, that's the easiest thing, right? I mean, you shouldn't be able to make investment decisions or not be able to make investment decisions based on your net worth. That just doesn't make any sense. If you are a specialist in a particular field, but you're a school teacher, why can't you invest in a particular project? It makes absolutely no sense. I think if we just expand that definition, that will do a lot in terms of carrying this industry forward.
Expand the definition of what? I don't think I understand.
Yeah, so sorry, for anyone who doesn't know, there are accredited investor laws. Essentially, you need to be of a certain net worth, have $1 million outside of your primary residence, or make an income of at least $200,000 per year individually in order to invest in certain types of securities.
Okay, that's not what I was actually referring to. I was talking about Article 8 of the UCC.
Yeah, that's, you haven't, okay, so that's a super advanced question, you know.
But you have to understand that's because it was such an impressive presentation.
Andrea is really kind of important in this space, and she's been fighting a fight that, frankly, a lot of people in tokenization of securities haven't thought about. So most of the people, we have an industry maturity issue in the sense that you will sometimes get people that are Wall Street coming into this space, but they don't really understand blockchain, they don't really understand culture, and they're trying to build companies and product in this space. And then on the other side, you have a lot of entrepreneurs that are more maybe tech heavy, and they don't really understand Wall Street and things like that. But what almost all of them are missing is that they're really focused on the securities law aspect of it. They haven't, not many people have focused on commodities, derivatives, financial instruments, money transmitting. And what she's talked about is, if anyone's looking for a great thesis, by the way, you should Google her name. Google. No, you should, because it's what she's bringing up is an important point. There's something called UCC, and I'm not going to do this justice, but effectively right now, as part of crypto assets or any sort of collateral, you need to be able to, in a healthy market, you want to be able to lend against it, borrow against it, and things like that right now. There's no clear mechanism that is great for how to do that for digital assets. So,
You're not a fan of Maker.
In all 50 states.
Yeah, in all 50 states. So Wyoming has kind of taken a look at the Uniform Commercial Code and